Tesla stock price is still down 45% from its high in December of last year. Over just a few months, investors have almost cut the company in half, with it now hovering around $850 billion valuation. Elon Musk is rapidly falling out of favor in the media with his push into politics, and investors aren't happy. His closeness to the US president's support of Germany's Fari Party, and an unfortunate couple of gestures, which may not have been Nazi salutes but were definitely perceived as such, have led the general public to kind of turn against him, and this has had a really significant flow and effect into Tesla. As crazy as it is, some people have turned to burning Tesla superchargers, spray painting Cybertrucks with SWAT stickers. Wheels are being stolen off of Tesla in parking lots, and the scariest one-shots have been fired at a Tesla showroom in Oregon, surging up around 90%. Elon Musk was celebrating the stock price was soaring and his wealth exploded. The world's richest man got a heck of a lot richer, with his wealth hitting a street staggering $486,24443, company that makes like 500 of these $100 million planes every year. Yeah, just delete it. That's how much Elon Musk has lost in the space of a few months. In fact, the Tesla decline was getting so sharp that on Thursday, the 20th of March, Musk held a surprise all-hands meeting that was live-streamed to the Tesla YouTube channel to try and get some positive news out into the world in what many are calling an attempt to stabilize the stock. Why Tesla's future is so bright, and in it he actually told attendees that in his view Tesla will be the most valuable company in the world by far, and they should hold on to their Tesla stock. And some people like Kathy Wood at AR Invest do see the future, so what I'm saying is hang on to your stock. So things were looking a little bit desperate. But interestingly, the live stream did work. Since the 20th of March, Tesla stock is up around 12%. Which, if anything, just highlights how volatile the situation currently is. But what I found really interesting is that in that live stream, Elon did actually raise a good point about Tesla stock and its volatility, and he even used a Warren Buffett analogy. The stock market is it's a very strange thing. You know, I think it's Warren Buffett's sort of metaphor analogy. Is stock markets like having someone stand at the edge of your property or your house and yell prices to buy or sell your house every day. And like sometimes they take their meds and sometimes they don't, so sometimes the person yelling about the price of your house is having a good day, and sometimes having a bad day, but it's still the same house. You're like, I'm like literally still the same house, like, you know. So Tesla stock goes up and it goes down, but actually it's still the same company, it's just people's perception of the future. I don't know, I guess it's just very emotional, and while I do question the motivation behind this whole event, what Elon Musk says there is true. He's talking about Benjamin Graham's Mr. Market analogy, which simply explains that there's a difference between the stock's price and its value. The price is set by Mr. Market, who might be excited. Thanks for watching.
The Palantir employees started leaking some stuff, and this actually revealed the company from a very different angle. As it turns out, there's so much we don't know about Palantir, and this makes me bullish like never before. New price forecasts are out, and the numbers people are talking about are actually crazy. They are much higher than we were looking for. But what am I even talking about? Well, let me explain. Disclaimer. As you may already know, huge institutions such as banks are always giving out their target price for up-and-coming stocks. Palantir caught the attention of the Bank of America, recently causing them to release a new target price for them at $50 per share. But these price predictions could be small compared to the potential of Palantir. So, what is it that Palantir is doing today that makes them a company full of amazing possibilities? It all starts with their effort to churn out new products and offerings. This also extends to the number of clients that they're onboarding. In fact, Palantir has revealed a new wave of customers in action at their AIPCon event. Today, Palantir announced the live stream of their 5th AIPCon. And this is going to be a huge event with possibly thousands or even millions of people watching. Over 100 organizations are taking part in the event, many of them speaking publicly about their work with Palantir for the first time. We're about to hear stories of Palantir's successes, with over 100 partners that they have. This includes major names like the National Geospatial Intelligence Agency, Aramark, BP, and many others. The event will showcase how these companies are using Palantir's technology. It's a big moment for Palantir as they demonstrate the growing adoption of their platform. AIPCon will be live streamed today, giving a broader audience the chance to see these partnerships in action. Everybody is excited about this. As a matter of fact, an employee from Palantir has been secretly revealing their preparations for the event on X. They even uploaded photos of the tech they're using for this event. What they're about to reveal here could be industry-shattering. On the other side of the fence, Palantir's stock price has been experiencing some wild and unpredictable movement recently. But mostly, it's leaning towards good news for its holders. In the last trading session, things took an even crazier turn when someone bought 3 million shares. And this isn't something people do if they don't believe in the stock's potential. This is a significant amount of buying from either one person or a large institution. Even more exciting, during this same trading session, its all-time high price. With this in mind, there could be a chance that they will break this soon and close at a price higher than this. This massive purchase, combined with the record high stock price, has led to a lot of excitement and speculation about where Palantir is headed next. On one hand, this kind of large-scale buying can be extremely beneficial for Palantir's future. How so? It shows that big investors, whether they are individuals or institutions, are placing their confidence in the company. When someone is willing to buy such a large number of shares, it sends a strong message to the market. Other investors tend to follow these kinds of moves, believing that those making such big purchases have insight into the company's future potential. It's like having a domino effect in the stock market. This increased confidence can help drive the stock price higher as more and more investors jump in, hoping to ride the wave of growth. But this is just the tip of the iceberg. The impact of this massive buy could help boost Palantir's market image. When investors see large purchases, especially when a stock hits an all-time high, they begin to view it as a strong performer, and more eyes will be looking at them. This positive momentum could lead to more media attention, increased interest from analysts, and even more institutional investors considering Palantir as part of their portfolios. As the company continues to demonstrate strong performance, this confidence could snowball, further driving up the price. But there are downsides to these too. One of the biggest risks of such large, single investor buys is the volatility it can create. When a single person or institution purchases millions of shares, they hold a significant amount of power over the stock's movement. One or only a few entities have all the power. And here's what's even scarier. If that investor decides to sell a large portion of their shares later on, it could cause a sharp drop in the stock price. This can create a boom and bust cycle where the stock price rises quickly on the back of large buys. But then it could also fall just as fast when those shares are sold. It also introduces more unpredictability, making it harder for smaller investors to know when to enter or exit the stock. For those who are not closely watching the market, this kind of volatility can lead to significant losses if they buy at a high price, only for the stock to drop unexpectedly. But here's something more interesting. When a stock hits its all-time high, it can lead to increased pressure. Investors might start to question whether the stock has more room to grow, or if it's reaching its peak. If people believe the stock price is overvalued, there could be a wave of selling, which could bring the price back down. This is why large buys like the one we just saw, while exciting, can also make the market more nervous. In the long run, this big buy could signal a bright future for Palantir. It shows confidence from major players, which often brings more stability and growth. However, the downside is that it introduces more volatility and uncertainty. If that investor eventually decides to sell, the market could experience a sharp drop. As with any stock, there are both risks and rewards. But if people see this as a huge sign for Palantir to grow big in the future given the potential of the stock, then they could have the opportunity of a lifetime today. And if they stay their course, Palantir could explode. The $50 per share target price will look cheap in comparison to their potential. So, how will they be able to achieve a really high share price in the future? Apparently, people have been observing something about Palantir. People are starting to view Palantir in the same way Microsoft was seen back in 1993. During this period, Microsoft was a company with the potential to redefine entire industries. And look at where they are now. At that time, Microsoft was still laying the foundation for its dominance in the tech world, and many believe Palantir could be at a similar inflection point today. This is not even a speculation. We're already seeing this happen right before our eyes, and they've penetrated tons of industries with their offerings. With its cutting-edge software and data platforms, Palantir is well-positioned to grow significantly in the coming years, much like how Microsoft did over the past few decades. But here's what's exciting about all this. Currently, Palantir's market cap stands at approximately $78 billion. Now, this is where it gets interesting. In comparison, Microsoft's market cap has reached an impressive over $3 trillion today. This means Microsoft is about 40 times larger than Palantir. The size of Microsoft today used to be impossible, and a lot of people didn't believe they could reach where they are now. But they shut their doubters up. With this in mind, Palantir could very well be on their way to replicate this growth. This can be seen as an opportunity for Palantir. When Microsoft was in its early stages, it wasn't the giant we see today. But here they are now being one of the most influential companies across the world. It took time, innovation, and strategic moves to reach its current status. And if Palantir is going to be consistent in their growth, they might even multiply their stock price to 40 times compared to today. You know how much that is? With their stock price trading at around $34 today, if they grow their share 40 times its value, then we're looking at around $1,300. This is such a huge target. Some people might even say this is impossible. After all, even Microsoft's price today is just a little over $420. Only time will tell if they can reach this. What's sure is that Palantir has the potential to follow in Microsoft's footsteps, and the current market cap difference only underscores the room for future growth. But what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, please like this video and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video with as many people as possible. Let's get this news out there.
Usually, the biggest things on the market are rarely visible to the public. They are often kept behind the scenes. And this is exactly what is happening right now. There's more than $1 trillion worth of risk as we speak. But this is the only way to make us go to the moon. Don't believe me? Then I'll prove you wrong. Today is a very, very important day for the entire crypto space. Disclaimer, the crypto market keeps crashing, pulling Shiba Inu price down significantly, and something bad just happened. The Bitcoin ETF's inflows from yesterday were revealed, and they are not good. We've now lost the 19-day streak of inflows with $65 million outflows today. People had been building a lot of anticipation because this streak of inflows was record-breaking. Everyone thought that from this point, the only way was up. But as it turns out, the crypto market crashed all of a sudden. It's really sad for people, especially those who invested heavily during the inflows, hoping to ride the wave of continuous growth. But here's something important. Some are speculating that this might just be a flush event. This is when the excitement is so high and so many people are buying in that the big players feel the need to shake things up a bit. By doing this, they can flush out the smaller investors and gain more power for themselves in the upcoming bull run. Here's how it works. When a lot of people start buying, the price goes up, creating a lot of excitement. The big players, or whales, see this as an opportunity. They might start selling off large amounts of their holdings, causing the price to drop sharply. This sudden drop scares off the smaller investors, who might sell their holdings in a panic. The big players then buy back in at these lower prices, increasing their holdings at a discount. A pretty similar situation happened in 2017. During the massive bull run, Bitcoin's price surged dramatically. But there were several sharp corrections along the way where the price dropped significantly, shaking out weaker hands. Each time, the price would eventually recover and go even higher, benefiting those who were buying in. The big players then buy back in at these lower prices, the dips. So, while it's a tough time for many right now, it's possible that this flush event is just a temporary setback in a larger bull market. Only time will tell how things will unfold. It's sad that these events can really shake up regular investors, especially those invested in Shiba Inu. The impact is pretty noticeable, with Shiba Inu decreasing by 7% this week. This kind of market manipulation is undeniably bad. It takes advantage of smaller investors creating fear and uncertainty, and can lead to significant financial losses for those who can't afford them. However, despite being unethical, these tactics can't really be changed or stopped easily. The market is largely unregulated, and big players have the power and resources to influence prices. They can create these fluctuations to their advantage, while smaller investors often bear the brunt of these manipulations. Amid this slip, an analyst on X highlights that hedge funds and Wall Street firms are increasingly taking short positions on Bitcoin futures contracts, betting on Bitcoin prices to drop, even though they might be holding long positions in the spot market to benefit from fee differences. This approach carries significant risk. If prices surge unexpectedly, these firms could face massive losses. Right now, between the current price point and slightly above all-time highs, there's $12 billion worth of short positions on Bitcoin futures, according to exchange data and trader notes. $12 billion is a substantial amount of money. And this shows just how serious these hedge funds are about their bearish stance. With the big players on Wall Street shorting Bitcoin, this strategy could end up backfiring in a spectacular way. And that's exactly what's happening now. The market is reacting to these short positions, creating a volatile situation where unexpected price increases can lead to huge losses for those betting against Bitcoin. It's a high-stakes scenario, and we're seeing the effects play out in real time. Even so, hedge funds selling Bitcoin futures isn't a new strategy. Often, hedge funds short the futures of a given asset while simultaneously buying in the spot markets. They use this carry trade to profit from the price differences. This tactic is common and has been profitable in traditional finance. However, Bitcoin is a different beast. It's a new asset class that operates outside the traditional financial system. This means that the usual strategies might not work as expected. If Bitcoin's price doesn't follow predictable patterns, these hedge funds could face massive losses. The risk here is huge because Bitcoin's market is highly volatile and less predictable than traditional assets. Hedge funds betting against Bitcoin in this way are taking a significant gamble, and if things don't go as planned, the financial fallout could be substantial. And Shiba Inu is feeling a strong impact from these developments. As of now, these hedge funds can only play with Bitcoin since there's only one cryptocurrency. Bitcoin is a crypto ETF currently trading, and that's Bitcoin. Hedge funds short Bitcoin futures to drive down the price, causing panic among small investors. This panic often spills over into the entire crypto market, including Shiba Inu, leading to widespread selling and price drops.